Should I just sell anytime I'm up 15? I traditionally have just been a buy and hold person, mostly index funds. I like to play every now and then with individual stocks. If the average return of the market is roughly 10, would it be a reasonable plan to just sell off individual stocks when you're up 15 or 20 and call that good enough? Does anyone else invest this way? And when would you get back in? Let your winners run. If one of my stocks or ETFs performs that well, I don't sell right away. Don't want to lose those potential profits, but I do consider placing a trailing stop loss to prevent it from falling. That being said, it depends on why it's doing so well in the first place. If it's overvalued because of current social sentiments, see all the AI stocks, I think a stop loss is generally in order. If the stock is just doing well because of the underlying business, then buy and hold might be the best option. To quote Star Trek, context is king. I generally wouldn't sell winning stocks unless these conditions are met. I've owned it for over a year. For tax purposes it's way overvalued and/or stock has reached peak mania. The best times to sell stocks is when you hear stuff like this: I'm selling my house and living in the woods to buy this stock. The average return of the market is driven by a small number of stocks mooning. You will not get good returns doing that. Do not do this. One of the best ways to kill your returns. 1 is you'll be creating tax liability. 2 is stocks going up is a good but far from perfect indicator that it's a stock to own for the future. Just keep your individual stock positions very small, stay diversified. It's generally a bad idea to sell your winners and keep your losers. Mathematically speaking, if you are able to earn and cash out a 20 gain within a short term, then that's better than 10 average annualized gain. If you can repeat that 20 times in 10 years, then you've essentially cut the time needed to get the same average gains in half. It's just that the difficulty of pulling this off is high, so people will advise you against it. Active versus passive investing. Since you are asking, yes, take profits when things are overextended like now. My exp when I was naive. I had 5 Netflix shares when it popped after earning. I sold it to book after market profit and thought of buying next day when price cools off little bit. It didn't come down after a month. And I end up buying 4 Netflix stocks with all money I got from sale of 5 shares. It was dumb move. I was young. If you have the urge to sell worrying you might lose the gain, definitely sell it and invest in an ETF. Then you don't have to worry about timing the market. Just keep investing monthly and let it gain over long term. My best winners, I have held them for several years and still don't have any plans of selling. Only time I would considering selling is if the thesis for the company has changed. That is not something you make it trivially for sure. It should not be driven by external factors like inflation seen now or war in Ukraine or supply chain issues which are not long-term factors. Profit is profit. Take what you feel comfortable with. If a stock is undervalued massively, then a 15 gain is nothing. Hold as long the valuation makes sense to you. I have a stock that went 3x from its 52-week lows, and even though I considered selling it, I'm still holding it. For now. Another stock went up 1.5x and I sold some of it. Another stock 2x and I sold out completely. Have a system where you can sort of value stocks, otherwise just hold ETFs and buy the dips, but don't sell. Sure. Sell when you're up 15, pay capital gains, rinse, repeat and be broke. If I'm up 20 on a stock, I typically take profits out and move the profits into a cash or an ETF. No sensible person does that. No one ever lost money taking a profit. Bears win. Bulls win. Pigs get slaughtered. No. Can you backtest this rule to see if it would have outperformed just buying and holding? If it didn't outperform in the past, then not clear to me why it'd work well in the future. Probably depends on the stock. 15-20 movement can be a lot in some stocks. Another thing to consider is compound returns. If you make 15-20 and reinvest the profits, you would be compounding your earnings. No, it depends on each case, but you will miss out if you try capping your gains to 15. Zoom out your time frame. I think this is a really bad strategy. Making an investment is like planting a tree. Do you dig up trees and replant them somewhere else every time they have a good year of growth? I bought MSFT and LLY in 2011 and still holding. Imagine the gains I would have missed out on if I sold when they hit 15 gains. As people say, you never go broke taking profits. Except the flawed ideology is that every time you buy something new it will eventually go up. If it was easy picking winners, then everyone would be rich. Off topic: anybody a small portion of their winners if they have any just to buy something by experience in the present, just so portfolio gains are not just abstract numbers but actually something materialized. Might be worth it for some to actually see some material benefit than just looking at numbers. Waiting for all the tax heads to chime in lol. You may be selling a winner with momentum to rebalance into a loser. It may bite you in the butt. Or, you might be totally right. Be mindful of your holding period as it dictates the capital gains you will pay, and look into wash sales. Depending on what you buy and sell, you may be able to avoid wash sales by using another big name brand's comparable index. Yes, definitely. It's due for a major down cycle. If you're worried about a sudden reversal so you want to take profit, and you think it might keep going up, sell half. Try the Kachusa free ride. Original price, current price, original number of shares, how many shares to sell. I do this when I'm comfortable with how much I'll have left to keep watching it grow. It's a personal choice. If you don't want to sell it yourself, let a stop loss take care of it. The fundamental problem with your strategy is that an exceedingly small percentage of stocks in the total stock market index account for all of its performance. So if you bought a representative sample of these stocks, sold the winners at 15 and either held on to the losers, or cut your losses at, say, 15, you'd massively underperform the index. Then you might say, but I'll just pick the winners, because I'm a great stock picker. And I'd say, again, that the odds are not in your favor, as a small percentage of stocks account for all the performance of the index. There's nothing wrong with taking profits. Just really depends on what you want to do with said profits. You don't. Every set period 3 months is good. Rebalance your portfolio. You'll naturally buy low, sell high. Rebalancing is of your strategy is 20 in 5 different stocks, bonds, ETFs, whatever, then after a period buy sell between them until you split them equally back to 20 each. I do that but only with certain stocks and only a portion of my funds. To me it's more like extra money for a vacation rather than a dedicated strategy. Stick to your investment. Do you allocate to stocks and bonds? If you are up stocks, you don't necessarily need to sell, just buy more in bonds. Or if you don't have cash to allocate more to bonds, then yes, you would sell equities and buy bonds to maintain asset allocation. And vice versa. Read up on if you don't have an investment plan. Why would you sell when you're up 15 if the average is 10? That means if this year runs to 30, we may find the next 2 years to be 0, according to your theory. It's better to not time the market, bud. I bought NFLX at 220. It just hit 424. I'm going to hold it, but if it hits 385 it will automatically sell everything. I also didn't sell it earlier because it has been less than a year. Look into swing trading. Isn't that called rebalancing? No. You should never sell. You will then be losing the effect of compounding. Plus the average is 10 includes the high years where you may gain 25, 30 or more. If you sold at 15 you would have effectively lost money because you didn't participate in the gain. For index funds you just keep buying and hold forever. Then when you retire you can live off of them.